Good morning, everybody. When I do open a presentation internally in Storebrand, when I do say good morning, everybody, then everybody says back, good morning, Sverre. So let's try once more. Good morning, everybody. Good morning. Very good. As you understand, we do this presentation also through webcast. And then I have to start to apologize about my poor English once more. But you know then the reason why I'm talking English. So we are passing this through webcast. Questions from you out there following us on webcast can be sent through the system and they will be answered after the presentation. When it comes to questions from the audience here, you may ask questions along with the presentation, and I have to repeat the question, so we are not waiting for the microphone. I'll repeat the question and then give the answer, but you are also allowed to ask questions after the presentation has finished. Before starting to comment on the highlights, let me start with asking a very simple question. What is the core business of Protector? It's not really a trick question. What is the core business? Come on, please speak. Number one is, obviously?
Sell insurance products.
Insurance. We are selling insurance products, hopefully to a profit. But sometimes many people in the insurance world, in the insurance industry, and also in the investment industry, is forgetting the second core business we are doing, which is investments, of course. So many of our competitors are saying that our core business is insurance, and investments is something else. It's risk-free, whatever that means, and it's out there. We don't believe in that. We believe that investments is core business of Protector. So we have two core businesses, and you are more than welcome to the Capital Market Day in August, when we will do a more in-depth presentation of how we are running the investment department in Protector. So if you consider buying shares, or if you are a shareholder, I will recommend you to join the Capital Market Day in August. I think you will find the program very interesting. When looking at quarter two results, what you can see is that the profit of the quarter is the best profit ever. So we have never ever given to the market such a operational profit, neither have we had that kind of size on profit after tax. So the best quarter in history. However, the reason why I do not have that kind of statement on the first foil is because the claims results in the quarter is rather poor. So there is kind of a mixed message today. I'm of course very satisfied with the profitability of the quarter, but it is driven by the one core, the investment side, while the other core is more of a mixed message to you today. But I try to clarify during the presentation. The growth is slightly on the lower side, 14%, but not at all bad. And as you know, we do have seasonality effects when it comes to volume growth. Quarter one is always the biggest one, and then quarter two and three is normally on the lower side, because the relative share of change of ownership is bigger, so there is a seasonality effect. Quarter one, the biggest one by far in percentage and in nominal value. Quarter two and three, a bit on the lower side. Quarter four, high on percentage normally, but not that much on in absolute terms. So 14% growth, it's kind of an what we call an acceptable level. Not very good, not at all bad. Normally when we meet you, we would open up to speak about the culture of the company. And you may see a change here. This is, normally we have had one word which is different in the English version. So which one is changed? And the reason why it's changed is because we have involved the UK team in defining the words properly, which is matching the UK market and the UK type of culture. So one word is changed. One of the values. It's not changed in the Scandinavian language, but that's correct. So it's bold. So the last time we met, the word was brave, and today it's bold. I won't go into depth the reason why, but the important thing is that the employees in Manchester, they have been heavily involved in trying to understand and define the culture of Protector with their own words. And it shouldn't end up with a lot of changes, but there is one change. So we will, from now on, in the English version of the DNA of the company, we will use the word bold then. I'll be back to the culture part of the company a bit later in the presentation. The growth this quarter is driven by Sweden, a bit more positive in Norway compared with Q1 and my expectations, while Denmark is on the lower side. But as you can see, the Danish volume is close to zero, so whether you are growing or not in such a quarter doesn't really matter. So good growth in Sweden, 30, acceptable growth in Norway, and a bit of a surprise that change of ownership ends up with a growth in the quarter. The reason why is because the real estate market in Norway turned more positively towards the end of the quarter. So that's changing a lot during the different months, actually. So the change of ownership growth size 7 is a bit on the upside, while Sweden, Denmark, and Norway is slightly on the lower side compared with our expectations. But it accumulates to 14, and as you know, year-to-date growth is 22%. I spend a bit more on the claims quarter. As expected, we do have reserve losses in change of ownership area this quarter as well. It is on a lower level compared with Q1. And I'll be back a bit more talking about change of ownership later in the presentation, but my view today is that the reserve losses situation in change of ownership probably is over. So my expectation for the next 2 quarters is that we won't see any significant reserve changes in change of ownership. It is not very easy to give such a statement. I might be wrong, but that's my view at the moment. And I'll explain the reason why a bit later in the presentation. I have earlier communicated that you should normally expect some kind of reserve gains within commercial sector Norway, because we estimate the reserves based on the FSA minimum requirement, which is a bit more conservative than real life. And what you can see in this quarter is some reserve gains in the commercial sector Norway. They are a bit on the higher end, including some workmen's comp reserve releases based on previous years. As you understand and know very well, the big players in the Norwegian market, they have huge reserves left to release in workmen's comp. We do not, because we are a lot younger company. But you can see some signs of the same fact that we have then at least some reserves close to or linked to workmen's comp in the earlier years of Protector. But not at all linked to the last years. We don't know these kind of results so far. But there are also a number of other gains on basically all other products. So minor gains on product 1, 2, 3, 4, and 5. That accumulates this quarter to be a bit higher than expected. The claim situation in Sweden is very good, but on the other side in Denmark, it's poor. in Denmark, which will continue for another 2 quarters, is my view today. Be a bit back. So a pretty poor claims quarter, and there is one thing which is more like this is insurance. We have a number of claim situations in Norway, which I feel is more like bad luck. So the level of medium to large claims is, depending on whether you are looking at gross or net figures, at least 2 to 3 times the size of a normalized quarter. And we have more medium to large claims in Norway this quarter than the last 4 quarters accumulated. Okay, so last 4, this, almost equal. So there is an element of bad luck in Norway commercial sector, which do not at all worry me. And it's, so there are 12 bigger claims in the quarter, more than double of the normal number, and the average size is also higher than normally. So that adds up to be a very bad quarter when it comes to medium and large claims. It's also a fact this quarter that many of these medium to large claims are hitting the net claims ratio more than normal. Normally when you see bigger claims, that is normally linked to the property product, which is linked to reinsurance contracts. While this quarter you have a number of claims hitting the claims ratio for our own account, like this one. The chapter accident, which you are all well aware of. We had a significant claim, which is totally for own account, and we have a number of other. This is a trailer? Lorry. That easy. It's a lorry down there, which is a claim for own account. So we do run a business called insurance, and sometimes we are a bit lucky with a number of large and medium-sized claims, and sometimes it's on the other side. So it's a lot on the other side in quarter 2, which in my opinion is nothing to worry about. This is insurance. But hitting the net claims ratio, which is 5 percentage points higher than the gross claims ratio in that area. That's not normal. So the reinsurance world is earning money on Protector at the moment, which is good and okay. It's hitting more on our own figures. There is also an element of clean desk influence. I have earlier on updated you on a very important project in claims handling area in Protector, where we are working in order to have a more clean desk in the daily working routines compared with history. It means that more claims are settled earlier and that the costs maybe are taken slightly earlier than normally. That situation is now kind of finished because we are more clean than ever in history, which is extremely good, seen both from a qualitative point of view and efficiency point of view. And the kind of minor short-term negative effects you have seen on the claims ratio is now behind us, and you will not see any. It doesn't really influence a lot, but maybe 2 to 3 percentage points on the totality. So if you are adding up some one-off situation, like the number of medium to large claims, and the fact that we have speeded up the clean desk project, which influences the claims ratio negatively, my expectation for the claims ratio for the next 2 quarters is on the positive side. That's also the reason why we haven't changed guiding on the combined ratio, even if we are slightly behind schedule on the net combined ratio after the first half year. As you are aware of, the diversification of the company continues. So we continue to grow more diversified, both seen from a geographical point of view and seen from a product point of view. So the level of long-tail business is continuing down, while short-tail business is increasing. Property and motor business, part of totality, is growing, which is risk reduction. And we expect that to continue when UK gradually kicks in, because in the first 2 to 3 years, we think that we will have a product overweight on property and motor business, and a product underweight on liability, like employee liability, which is basically workman's comp, but it's named employee liability in UK. So this kind of diversification situation is expected to continue also after UK kicking in. The cost development is extremely strong. You have never ever seen such a cost ratio in any insurance company in the world. However, it's not that good. So 5.1 is a bit lower than underlying reality. We are accounting salaries in Norway only 11 months a year, not in June. That's the kind of accounting principles we are following in the Norwegian market. A lot of our employees are here. So we are seasonality low in Q1, and the long-term incentive plan is not kicking in Q2 since share price haven't performed the right direction. So there is a couple of elements driving the cost ratio lower than underlying reality, but still, I think it's fair to say that if underlying reality is more like 6, it's pretty good. The other ones are where they always are, 16 or 17, or in UK, 20. So the extremely strong cost position of Protector continue to improve, and we are moving downwards faster than competitor in the first half year of 2016. The question here when it comes to the reinsurance commissions is whether this is one-off effects or not, and I will comment this quarter that it is not a one-off effect. Yes, we have released some profit-sharing agreements from 2015, but at the same time we are building new profit-sharing type of reserves in the balance sheet. So it's not really a one-off effect. As I earlier have told, we are a lot on the conservative side when we are doing our profit and loss statement every quarter on the reinsurance profit sector. And we have 7 different contracts running, and it's theoretically impossible that all of them will be that poor that we are doing the quarterly accounting. So the reinsurance commissions will continue to be high, and if you make a simple calculation, let's assume that we are ceding around 15% of the business, which we do at the moment, and if you have around 25% average commission on that ceding level, which is a rather realistic figure to end up with at the end of the year, it means that you have 3.75 percentage points reinsurance commission every year. If you run at a cost ratio size 6, and if you have 3.75 annual commission on the reinsurance property portfolio, then you run at a net cost ratio normalized to 2.25. It means that we can run a claims ratio on all other products size 90 and still be extremely profitable. And the kind of commission level I'm talking about is not really unrealistic. It's of course based on an assumption that we do have a healthy property product portfolio, and historically to date that has proven to be right. So there are a lot of evidence in our 12 to 13 year history that we do have a prudent property portfolio. So if you are separating out the property portfolio Protector and the reinsurance structure and the reinsurance commission, we can run everything else on a claims ratio size 90 and end up with 92.25 as a net combined ratio for future, which I guess is pretty good. Which means that if you have a normalized return on investment, we have absolutely no problem to deliver 20% or more return on equity. It's a rather important point. It is. So reinsurance commissions this quarter, is it one-off? No, it is not. And do we have a better 2016 level of reinsurance commissions to arrive at a later stage? Yes, we have. So we have a lot of reserves. And it is a number of tens of millions of Norwegian kroner, which I'm talking about. So it's not a one-off, and you should estimate a normalized net cost ratio on company level around 2 for the next, let's say, 3 years or something like that. So analysts, consider what you would like to do on that side, but then you have to take out then around 15% of the portfolio, which is the ceded level in the property sector, or as a percentage of the total portfolio. I have commented a little bit on Norway Commercial already, and the other element is that the volume up is rather good, even if the renewal rate is very low. So there is a competitive pressure in the market. Rates are under pressure this year again. It's one of the reasons why the extremely good combined ratio you have seen the last 3-4 years, more like 86, 87, you shouldn't really expect that to continue in future. So when we are guiding on both a combined ratio size 90 this year and in a longer run, that is probably better than look into history and look at ordinary history and have an estimate that the combined is ending up around 86, 87 in that. Yes, there is a rate pressure. Can we live with it? Yes, we can. Will it be profitable in future? Yes, it will, but not on the same profitability level as you have seen. So if you should hope for an improved combined ratio, better than 90 in future, that will probably then arrive out from UK. That might happen, but that will take at least 3 to 5 years in order to verify. When we're looking into the UK market, I come back to it in a couple of minutes or a few minutes, it still looks very good. But yes, there is a pressure in the market, and this is a significant area. The volume in commercial Norway is rather big. So yes, it influences on the profitability for the future, but it's still very, very healthy. So my expectation is that the kind of one-off situation, the kind of bad luck situation in this segment in Q2 will not repeat itself in the next quarters to come. No guarantees given, but strange things happens in the insurance business, but that's my view at the moment. It has been a rather abnormal Q2 in that sector. Sweden, everything is fine. The growth is good. The profitability is good. The control of the business is good. So an important statement here is that facilities and affinity programs, they are running very well. And have that as a background when I do describe some challenges in these areas when I come to Denmark. So in Sweden, it's more like tick, 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 tick. Everything is running very well. Of course, the kind of claims ratio we see here is probably a little bit too good. You might have slightly higher claims ratio in future. But okay. Finland, we have started, and it's not very much to say about Finland, I think. Some more clients are on board. This is according to plan, and we do establish ourselves as a true Nordic player, not only a Scandinavian player. In Denmark, the seasonality around the volume is much more extreme than in Norway and Sweden. So it's more like a Q1 game. At the same time, we are not totally satisfied with the sales level in Q2, and what we see is arriving in Q3. So we can influence more, we can sell more, also in Q2, 3, and 4 than we do at the moment. So we can improve and should improve and will improve the kind of sales activities in Denmark. It's not very important, but the important thing to communicate to you is that some of the facilities and affinity programs, they are not running well. And I have tried to illustrate this. This kind of spreadsheet you see here with some kind of colors is exactly the kind of follow-up methodology we do have with these kind of affinity programs. It's neutral information here, but normally there are names and there are claims ratios and there are more concrete elements here which we will not kind of communicate to the market. So we don't want to say to competitors exactly what are the important criteria in order to run such facilities and affinity programs here. The comments we have to it is that, first of all, it takes normally 1.5 to 2 years to establish a reasonable control on these kind of programs. So when you sign them, you think they will run well. You don't really know before after 1.5 to 2 years. It might take longer, especially if it's a workman's comp kind of program up and running. Then it will take many more years before you have control. So what you see here is the kind of profit and loss type of conclusions on the different programs. And 4 out of 11 programs, they are unprofitable. And you can see some colors here. They are light green. They are looking good, but we are not very sure whether it will continue to be good or not. Why? This is a kind of analysis based on the total administrative control of these kind of programs. And we would say and conclude that we have profitability issues in 4 programs and administrative challenges in 6 of them. So when in Sweden, I think it's fair to say that out of 12 to 15 programs, we have a very good control on basically all. We do not have that kind of control in Denmark. And when we meet such problems, we talk about them. It's not dangerous. We do mistakes. And if you are honest about yourself, then you can start doing something with them. So measures has been taken, and that continues in Q2, and that continues in Q3. So the kind of first phase of the cleanup will be finished after Q3, and you will see profitability improvements from Q1 2017. So the profitability improvements will happen from Q1 2017. However, there is still challenges in these kind of areas because you can clean up, but it doesn't really help if you are not establishing a sufficient administrative control on each and every program after cleaning up. Then it will end up in a mess again, an anti-selection, for instance, in some of the programs. So we have a lot of work to do in Denmark in order to, 1, clean up, 2, establish a sufficient administrative control for future. In the meantime, our appetite on these kind of businesses is reduced. So we will sign less volume in these kind of areas until we feel we have a better control on the situation, which will influence volume not very negatively the rest of the next 2 quarters, but negatively in 2017. So we will fight for some of the big facilities and affinity programs. We have started to work on some of them, which have a renewal date January 1st, 2017. So we are not like walking out of the market, but we have a more careful approach towards the market until we do feel that administrative strength is good enough in order to control these kind of programs. I think it's fair to say that on a Scandinavian level, we are the market leader in Scandinavia within these kind of areas. And basically, we are good at it. It's running well in Norway and has done for a number of years. it's running very well in Sweden, but it's a more mixed kind of message in Denmark. But we do have the necessary competence in Scandinavia to fix the problems. But Denmark needs some help, and they are having it, and they are happy to get it. If you think it's easy to make up this one, it's not. It's rather difficult. It takes only a couple of years. And behind every figure here, other places in this kind of view, it is a lot of work to be done. But we think we have a pretty good overview. From January 1, 2017, the profitability will improve. Okay, when it comes to change of ownership, yes, we have some reserve losses in Q2, as earlier communicated, but operationally, my opinion now is more like it's a tick. So now we are back in business. We have a very good control on the claims handling side, and my expectation to be better than ever in claims handling, change of ownership in Q4 is exactly the same, or even a bit more positive than last time we met. So if we go to this one, you can see that the number of open claims is a bit more than 200 below target, and target is stipulated here. And these kind of figures going down, while portfolio is rather stable, which is the situation in change of ownership at the moment. It means a significant better position when it comes to efficiency and quality. So this is the best kind of information to give, of course simplified, related to the real world, which is a bit more complicated. But we do feel at the moment that management and employees have turned a difficult situation around and used what we call a crisis internally to be a very strong position. And the kind of new, the latest quality external survey, the 2016 survey, shows that we have extremely high quality feedback from the market, and below the kind of overall foil you see here, there is also a fact that that same survey is concluding with that claims handling is better than ever in Protector. So it's not only our own internal view, it's supported by external surveys that claims handling area in change of ownership is back on track and is performing very well. And then next we should see now is that the profit is coming back again in this area. So it's good. Hard work, a lot of work for 12, 15 months, but it works. So if you take the challenge, you will sooner or later you will be back on track, and I think that we have that back on track at the moment. This is possibly the most important foil in the presentation. I do not very often talk about the different cultural activities we are doing, but you know very well that we think culture is key to the future of a company. Only a few examples. We are running another Protector Academy for new employees that has been improved and broadened out. So it is a lot of activities going on within these kind of two words. We have started a new generation leader program in order to prepare Protector for kind of a next level situation where volume will be significantly bigger than today, and the number of employees will grow rapidly, and we will have more markets and more segments, and go into new and different product areas. Then we have to educate more managers, and we prefer to do that internally. There is a small group of people which we do employ from external sources, like in Manchester, but we tend to stick to train our own managers. We have spent a hell of a lot of time in order to define a Protector profile. That symbol is the symbol of the Protector profile. That's Leonardo da Vinci, and it is a symbol for where art and human being meets, right? The Vitruvian Man is the name of that guy. And that's kind of what we have as an kind of internal ambition then. An employee in Protector is a human being, but he should also be an artist in his daily work then. It's a bit of a big phrase, I think, but if you have a taste and have a look, and if a claims handler do have the right X factor, can take the right element out from a situation with a lot of information, then he is getting closer to be an artist. And that's what we are looking for. I'm smiling a little bit when I'm saying it, but we like kind of symbols then. We have implemented a balanced scorecard. And many will say that, okay, aren't you 15 to 20 years late implementing that? And don't you know that it's out of fashion? Yes, I know. I know it's out of fashion, but we don't really care whether something is out of fashion or not. We are the challenger. We are doing exactly what we would like to do. The important thing, though, is that the crosshair, the 1, 2, 3, 4, 5 elements, which is marked here, they are all cultural elements. Okay? And I don't think you will see that in many balanced scorecards, that 5 out of 10 elements is cultural elements. Like, how is the culture in your department? And how good are you at implementing objective and targets within your department? Do every employee own their targets, the department's target, and the company target? Or is it objectives and targets given by management? So we are evaluating these kind of very important cultural elements, while the corners are big projects or big achievements that each and any manager should focus on in 2016. And what you see around here is the actual results the managers deliver, an accumulated view on it. So it's 5 cultural elements, 4 which is related to projects or personal development, and 1 to the actual financial results. So it's not a scorecard focusing on financial result, it's focusing on the important things, which is the culture in your department and in the company. There are a lot of cultural initiatives running in different sectors of Protector. This is from Suits, and you know that we have around 50 lawyers in Protector, basically in claims handling. You have seen Suits, haven't you? So this is Mark and Harvey. And if we do quote Harvey, he says a very good thing. The only time success becomes before work is in the dictionary. So before hard work. So hard work creates success, not the other way around. So these kind of 2 guys are what we could call a leading star for a number of lawyers in Protector. And that's the reason why we have picked that symbol for a cultural development project within certain areas in Protector. This is the cottage where we are passing all people in order to build further on the culture of Protector and build the Protector profile. We evaluate all the employees based on that profile. Sweden have decided to do triathlon in order to challenge themselves. And I've joined them, of course, and done my first triathlon. It's not extremely good, but at least I have challenged my son to compete with me. He's sitting in the room now, and he don't dare to do that. So I'm teasing him a little bit. The reason why he is here is because he is, of course, an investor in Protector. And you don't have any plans to sell, do you? Have you?
I haven't.
Not selling?
No.
No. Are you buying them?
I might.
You might.
I might already have bought
Okay, so you have already done it then, on a lower level than today. Okay, so I don't know the share price today, but I think it started at least to going down a little bit. So it should, my son David, you should consider buy more, of course, after releasing the figures we have today. But okay, so the Swedes are doing triathlon, and I have joined. The Danes are discussing among all the employees this book, which we feel is rather good to grade, and there is a lot of other activities going on the cultural side. So this is who we are. That's what we feel is important, and if I haven't communicated that properly, so then I try to speed it up a little bit then, and talk more about culture. According to one of my employees in my direct reporting line, in my management group, I don't say the name, but she gave me kind of a constructive criticism in the feedback a couple of weeks ago when we had a quarterly discussion. You have to talk more about culture. You have to make it more visible, Sverre. So you are not doing a good work in that, so please speed up a little bit when talking about culture, which was a good challenge to have. The Wolf Pack is an internal project in Norway, and we are spending a little bit of time in order to pick the right name for a project and the symbol. Wolves, they hunt together, and Protector, we hunt together. And I guess that if you're going to Kipling, he is saying something about that the strength of the wolf is in the pack, and the strength of the pack is in the wolf. If you translate that to culture, it's more like every employee in Protector influences the culture influences every employee, and we are stronger together. So that's kind of the name Commercial Sector Norway put on a number of cultural development projects which they are running internally in Commercial Norway. So we are, I think it's fair to say, investing even more on cultural development in 2016 compared with any other period in the history of the company. A lot of time, a lot of resources, a lot of money invested, and we do feel it's paying back. Okay, so what about UK? UK is developing according to plan, possibly slightly better. We have opened up for discussions with selected brokers in the commercial sector. It's moving, and we have given the first couple of quotations in commercial sector, and we have the first 5 customers on board in public sector. Last time we met, it was 1. Now we have 5, and the level of quotations is increasing rather rapidly now. It will slow down a little bit in July and August, and then it really, the number of quotations will start to fly in public sector. And we have opened up for commercial sector quotations. The recruitment process is developing, so we have 9 people on board at the moment. We have signed 4 more. There is another 2-3 recruitments in process, and we will start in September with a new phase of recruitments. So I would guess that we will have 25 people on board early 2017, and we have started to consider where to locate the next office in UK. And I think it will be London, and we might start recruitment for the London office at the end of Q3 this year, which means that we will have a new team on board late Q1 next year. That's my expectation, maybe early Q2 next year. Then we have had 12 to 15 months running in Manchester. We have learned a lot about the market, and we are ready to broaden out with the first kind of underwriting office outside of Manchester. So the question is, what about Brexit? And our comment is, of course, it's a lot of uncertainty. Does it affect our plans? Not at all. Not at all. So we do exactly what we had planned to do. And we think that there are, of course, negative elements, but there are other positives as well. How that balances out, it remains to be seen. But we are a small player in a big financial complex area. And UK will exist and will be available. And I think that the worst case scenario we can think about at the moment is that we have to establish a different daughter company in UK and establish a separate balance sheet, which is absolutely possible to do. That's more kind of on the worst side. While there are a lot of other scenarios which are either neutral to today or a bit on the upside today. So we have had a discussion in the board, of course, about the matter. We are absolutely not doing anything different in UK. Why should we? Why should we? The good thing is that many of our competitors are having difficult discussions what to do now. So there are some signs that some of the competitors are withdrawing from some market segments in UK that might accelerate. That started before Brexit. That might accelerate. But that's a speculation. It's too early to say. Wait and see. It's a big market. We have been received extremely well by the public sector. And we have, as you can see here, already now met around 85% of all named individuals which is controlling the public sector insurance-wise in UK, which is more than twice the size of the Nordic market in that area. So I spent 1 week in UK last week, from Tuesday to Tuesday, and other key people also from Oslo are spending much more time now in UK in order to establish ourselves as an interesting alternative to the present market and to the present competitors. I've never ever met so much energy like in the rooms we do have meetings in UK. And I have opened Sweden and Denmark, and we have been received very well in Sweden and Denmark. But it's even more positive in UK. So we are not worried about the volume development in Protector in 2017, 18, and 19, and especially from 18, you will see UK kick in. There will, of course, be visible numbers in 17, but the figures in 18 will be on the strong side. We are not giving any formal volume feedback to you today, but we will update our communication in the Capital Market Day in August. So then we will give, as you already know, a more detailed view on the prospects we do have in UK, the project we are running in order to penetrate the market. And we will also be back to you with more formal statements about the future regarding combined ratios and expected growth for future. So we will be back to that in the Capital Market Day in August. So if you are not able to meet, you should at least read through the kind of presentation which is coming at that time. The claims database in the UK now is bigger than in Scandinavia. So we feel more secure than 3 months ago when we are giving the quotations out there to the market. Okay, so here we have the profit and loss. What you have seen is a profit-sized 255 million and a rather low tax rate because a lot of the profits is coming out from the equity side, which is zero tax in Norway. And I think that the other figures here I have commented on. This is all the information given to you when we talked about the subordinated loan. So the solvency capital ratio Protector today is around 146 based on the standard formula, and it would be around 176 after picking up the subordinated loan. The kind of new targets on the solvency side will be communicated on the Capital Market Day. So we will be back to that new target, which has been discussed in the last 2 board meetings and was decided yesterday, but it's nothing dramatic in it, and we will wait to update you more in depth on the solvency situation in the Capital Market Day, including the new targets which we have set for the company. When it comes to asset allocation, there are a minor change on the equity side. We have increased the level of equities a little bit after Q1. And we have sold all totally US high yield. So the level of high yield accumulated is on a lower level compared with end of 2015 and after the end of Q1. And the reason why is stated here. Yields are no longer in favor of US high yields. Risk reward is expected to be better in Scandinavia, of course. If not, we haven't done it. And it do also reduce capital requirement. We could have added that the cost of buying these kind of products, including currency to secure the currency, is of course higher than internal management cost in order to run a discretionary bond portfolio internally. So since we have been very clear about that kind of investment, then we would like to be very clear on we are out and we have left, and it has delivered a very good result in 2016. What you can see from the investment side is that the other core business of Protector is doing extremely well, and I think it's none of our competitors will be even close to that kind of quarterly figure. Of course, an element of good luck in that area. But what we have seen since we insourced management of both the fixed income portfolio and the equities from Q4 2014, we have done better than the market with a rather interesting difference between ourselves and the market. And again, we will talk more about it on the Capital Market Day. There might be a bottle of champagne delivered to the team today. So we have invited Katrine and Dag Marius and Andreas and Christopher, all 4 to join today. So we do not have a champagne on the desk. That's not really suitable. But I think there is a bottle of champagne waiting back home at the offices for you, just to mark that this is a extremely good quarter then. I'm not quite sure what we should do then when it goes all the way around, when we are losing money. So then, okay, then you, Dag Marius, have to bring 4 bottles of Coke then. That's your favorite drink, isn't it? Yes, not diet or zero, but real Coke. Is that right? Extra sugar. Okay, so we are satisfied, and especially when you look at the bond portfolio, we don't have a benchmark up and running so far. Internally, we do have some benchmark. Which one should we pick? You can pick any you like. So it doesn't really matter what kind of benchmark you pick. We are delivering rather good on the bond side. this quarter compared with anyone, I think. But as you know, we are early out with the figures, so we have to wait and see. Okay, the shareholder list, you saw that the chairman sold some shares in May the 11th. So we feel since he has been a part of the top 20 list since 2003, we think it's prudent to update once more then, that he's still a significant shareholder, but he has reduced his portfolio then in May. A warm welcome to you to the Capital Market Day in August. We will do a company update. Since we missed out Sweden last year, we would like to go in depth in Sweden this year. It will be an in-depth presentation of UK, and we will also invite the two key managers from UK to arrive, Maureen and Julia. They will both be here. Henrik Høie will do the presentation. He is in charge of setting up Protector in the UK market, but Maureen and Julia will be here and will give a few comments on their view on the Protector culture and our opportunities in the UK market. And we will spend time together with you talking investments, included in that the kind of model we are working after when considering what kind of papers to invest in. So we hope you will find it interesting and hope we will see you August 18th. And there is one other financial institution with same day, but they start after lunch. Is that correct? Yeah, so Gjensidige, do you have a Capital Market Day the same day, but they will start at 1 o'clock, I guess?
Day for analysts.
Okay, a day for analysts. Okay, okay, in that area. So there has been some kind of feedback given from you because we had Sampo and Gjensidige and Protector on the same time, but now we three have sorted it out with talking. And I guess that the other two moved, Andreas, is that right? Okay, Sampo moved then, since we asked them. They were a bit afraid that they wouldn't have any people arriving at their Capital Market Day if we had it at the same time. So we are the challenger, you know, we feel that that's natural, that you have to pass since we have decided on what time to have it. Makes sense, doesn't it? It makes sense. Everybody is nodding, so it makes sense. Okay, so the guiding is unchanged. Even if you are slightly behind here, of course, there is a downside risk now on the 22. So we are a bit more dependent now on Q4 figures coming out from UK in order to reach 22. So you might see a figure below 22. So it was more like, should we reduce it slightly or should we let it pass? So we said that, okay, it's there, it's 22. But the risk is now also on the downside, since Q2 volume is on the lower side compared with our expectations. But the status is a growth rate size 22 so far. The biggest quarter is behind, so the downside risk is rather limited on the volume side. We are ahead, but the underlying reality is a bit higher than 5.6. Is more like a bit above 6, which is the underlying reality. So it won't continue down from here. We are slightly behind, but if the claims development is according to my own expectation, you will gradually see that improving, even though the cost level in Q3 and 4 will be higher, of course, than in Q1 and 2, because reinsurance commissions are lower. So now we are through, and then it is room for questions then. So any questions from the audience? Thomas? Du kan gjøre som du vil. You can do as you like. I'll translate or I repeat your question.
Could you quantify in millions the for instance, the one or two or three biggest large claims in the quarter, and also the run-off loss on the change of ownership, if you could quantify that in millions?
The biggest, I guess, is close to 15 million Norwegian kroner, a bit above. So you have, how many? 20? A bit above 15? Is that what you're saying?
A bit above 15, yeah.
Yeah, a bit above 15. And then you have some of them between 2 or 3, between 10 and 15. And the rest is more what we could call medium, but then all of them higher than 3. And no, we won't quantify exactly the reserves on change of ownership and the other products in this kind of quarter. There are significant reserve losses, though, on change of ownership, as expected, but on a lower level than quarter 1. And on the other side, you have the positive gains from the commercial sector. Then. It was a question here.
Yes, it was just following up on Thomas. What kind of products did you have this run of gains on? For what kind of products is it? Is it workers' compensation, or is it a different kind of motor products you have?
Okay, so the question is, what kind of products did we have a run of gains from? As I said in the presentation, the biggest run of gain was from workmen's comp, but we had additional run of gains in most of the other products, like accident, like motor, like not liability this time, because we had a case reserve increase in that area, and the smaller personal lines of products as well. So most of them. And there are some questions coming in. Can you please tell us what the impact was on the overall claims ratio from the Norwegian mid-large claims in quarter 2? I think we have commented on that. The kind of level gross was around 8 percentage points, while the normal large loss rate is around 3 to 4, depending on what kind of period you are looking at. But for own account, it's higher. It's higher. So it's above 10, while the normal is then again down to these kind of 4. So that influences, let's say, give or take on the net combined ratio with around 6 percentage points. Looking at the assets, there is a significant increase in financial derivatives and other financial assets. Can you please explain the background of these changes and how do you might be differently hedging your investment portfolio? So if I'm looking a little bit on you now, Katrine, when I'm responding. So yes, there is a derivative increase in the balance sheet, which is linked to avoid currency risk only. So it's a technical issue. You should see directly through it. It has minimum cost, and it really confuses the figures when there are changes in quarters on the derivative side here. So there are no speculation at all. It's currency secured instruments used only. And what you really should look at is the kind of figure we have given through this presentation. What is the size of the investment portfolio? And that is kind of more a stable development, growing 20% a year. And then there is another question.
I actually have 2 questions. First of all, could you tell us which products that you are experiencing rate pressure on in Norwegian commercial lines? And secondly, regarding your investments, could you say what kind of level you currently are on when it comes to high yield in the portfolio and what you are targeting? And also if you could say which share you're targeting into equities now, please.
Okay, so the last one first. The discretionary portfolio we are running in-house has an average in investment grade. So that is an average investment grade portfolio, Within that portfolio, there are, of course, a proportion of high yield. The high yield level in quarter 1 and 2 has been decreased a lot, and we won't give you any more detailed information now. We will be back to that in the Capital Market Day. Go more in detail on what the situation is at the moment, and more in detail about the targets for future. And the first question again was?
There was also a sub-question there about the equity share, what you're targeting, but maybe we'll come back to that.
Come back to that.
Okay, so the first question was on, you mentioned rate pressure on the...
Okay, the rate pressure in Norway is focused on group life, other illness, workman's comp. While in property and motor and liability areas, we don't see these kind of challenges. And our risk appetite within these product areas is reduced, and we do accept a lower renewal rate because the pressure sometimes is unhealthy. These product which I answered is close to 2/3, at least a bit more than 60% of the volume in commercial sector Norway. Bit more than 60% of the volume. So it's a significant area where there is a lot of pressure, and we have to let some clients go. But while on the property, liability and motor area, we are very competitive, and we are winning a lot of business to what we consider to be a profitable rate.
Just follow up on that. Who's the one that's pressuring the rates at the moment?
Not anybody in particular. So there are not like a situation where we see a very a crazy guy in town. There are no such companies at the moment. We have seen that historically, of course. Someone is blaming that we are that guy, the crazy guy. I think that our figures have proven that statement is not correct. But there is a pressure from what you could call the normal 3 to 5 competitors. Gjensidige is bit back, Tryg is there, has always been there. Not very often but now and then. And then there is a small group of what we would call smaller companies in that area. So no particular. It's a market situation. There is a... could you enter the password again? There is one more question coming from those who are watching. That's a very good question. Good luck and have a nice summer. Okay, is that okay? So my feeling when going to summer vacation or work one more week is that we have a continued profitable growth in Protector. We are doing 2 core businesses, insurance, which is not that good this quarter, but we will be back on track in quarter 3 and 4, and investment, which is very, very good this quarter, and we would expect that to be higher than peers on a normalized level. So our ambition on the investment side is, of course, to beat the market. So you are very welcome to the Capital Market Day, everybody. Thanks a lot for joining. Apologize for being a bit late.